I'm Charlotte McLeod with investingnews.com, and here today with me is Jordan of Mining Stock Monkey. Thank you so much for being here. Great to have you.
Happy to be here, Charlotte.
Really good to be speaking with you. We were talking just before we turned the camera on. We've been trying to make this happen for a little while, so glad that we finally did. And I think that many people in our audience will probably be familiar with you and your work, but because it is our first time talking, I was hoping you could start with a brief introduction to yourself and your work, maybe talk about how you got into this space.
Yeah, sure. Well, growing up, my dad was a financial advisor. And I mean, I was into stocks and stuff from a young age from that. And my parents gifted me a metal detector when I was young. And I went into the backyard with the metal detector. And the first thing I found was a penny. And immediately thereafter, I think I found a nail. And right after that, I found a 1901 silver quarter. And that kind of got me hooked on precious metals from a young age. That was a really cool experience. But then starting right around the time I graduated high school, I started investing in mining stocks, losing a lot of money, the first 5 or 10 years or so, and learning lots of lessons, making lots of mistakes. And, over those first 5 or 10 years, making lots of mistakes, I learned a lot of stuff of what not to do and a lot of the pitfalls to avoid and how to make real money in this sector. So now I'm 38 years old today. So I've been doing this for, 20 years now. So, and then a few years ago, I didn't like the business I was in, and I felt like it wasn't a great business. And I felt like there was a lot of stuff that I had learned that I could teach the beginner investor or the person who hadn't been doing this full time, and teach them a lot of the pitfalls that I encountered when I was younger and started investing in the sector. So that's kind of where Mining Stock Monkey comes from. Now I offer a research service. I do some videos on my Mining Stock Monkey YouTube channel doing deep dives into companies. And yeah, so that's basically where we're at with that.
Well, I always like to hear how people came into the sector. I feel like there's a lot of good stories out there. So thank you for sharing. And we're going to get into what you're doing today. I thought we could begin with a top-down look at your portfolio in a broad sense. If you could give me a look at how it breaks down in terms of commodity as well as company size, just so we're aware of what you're doing there.
Yeah, sure. There's a lot of gold and silver exposure in the portfolio. There's some copper exposure, there's a little bit of iron ore, a little bit of this and that in other commodities. Now, I wanted very heavy precious metals exposure 5 years ago, 6 years ago, 10 years ago. But today, after the gold price has moved up about 5x from its 2015 lows, and silver has moved up almost 5x, well, I'm trying to reduce my precious metal exposure and keep my precious metals in safer vehicles rather than maybe some risky producers, for example. So that's kind of what I'm thinking there. But in general, I like to buy stocks in a commodity when that commodity is cheap. Because when a commodity is cheap, the low prices eventually reverse, because this is a cyclical industry. And this is one of the mistakes I made when I started investing in this sector. Because, for example, I would see a company with a really low price to earnings ratio thinking, oh, this is a great buy. It's super cheap. But it had a low price to earnings ratio because the earnings were so high because the commodity was at a cyclical high. So investing in the low PE in this industry is often investing at exactly the wrong time. So right now, as I'm still interested in precious metals and gold and silver miners and things like that, if I can find them in the right price, or if I can find the right opportunity with great growth, or something that I see that the market is missing today. But yeah, in general, right now, I'm looking for commodities and companies that are focused on commodities that are more unloved.
Well, let's get into that a little bit. I think this is going to be a two-part question. So where in the cycle do you see us right now for gold? Obviously, it sounds like maybe we're maybe closer toward the end there in your view. And what are the up and coming commodities that you're starting to focus on right now?
Yeah, great question. And I think I'm going to disappoint your viewers with my answer for, well, let's just say precious metals, lumping gold and silver into one bucket, since they typically trade in lockstep, more or less. And if I would make the argument that this gold bull market started in late 2015 because that was when gold bottomed out. Now, some might make the argument that this gold bull market started in 2021. Or after there was a peak after COVID, and then it came down, if I recall correctly. Some may make the argument that it started a few years ago. But if we take the argument that it started in 2015, we're more than 10 years into this bull market. And previous bull markets have lasted 3 years, 7 years, 9 years, 10 years. So comparing it to previous bull markets, since, well, the U.S. government removed the price fix of gold in the early 1970s, I mean, this one's looking pretty mature. So there's that argument. But at the same time, I see lots of macro forces that could continue pushing gold prices higher. For example, the U.S. government weaponized the dollar in 2022. And that made, I think, a lot of central banks around the world think, hey, maybe it's not the best idea to own U.S. treasuries, and maybe we should buy something else like gold instead. And I think that created a major tailwind. And then in terms of, I see endless government spending in sight, and I think that's a long-term tailwind for gold as well. And as long as governments are going further and further into debt, that's going to devalue the fiat currencies around the world. And in terms of fiat currency, well, then the gold price is likely to go higher over time. But we also have to consider that even though that's true, and that has been true for a long time, there have still been years where the gold price fell. So we have to expect that again, I think. So that's kind of where I'm at. I see arguments for it continuing, and I see arguments for it ending. And I think both of them are very good arguments. So I don't know. Now, part of your question was, what commodities am I looking at right now? What commodities are more out of favor? Well, I would say nickel is one. Potentially lead and zinc, but I would have to do a lot more research into lead and zinc. Potash is another one that I would like. I'm very bullish on copper, but I'm also very nervous about a recession, and copper prices come down in a recession. And also there's some major copper mines around the world that are either offline right now or producing at a much lower capacity because of some instability in their mine that happened. And I expect those mines to ramp up over the next couple of years, which creates more supply, which creates downward pressure on the copper price. So that although I'm very bullish on copper, I'm waiting for a better opportunity there.
Okay, I think that makes a lot of sense. And I'll try to break this down, maybe looking first at gold, because right now I know we're off from the all-time highs we saw in gold earlier this year, but we're still in a historically high gold price environment. And one thing that I've started to hear about the gold miners is, well, with prices at this level, they're all essentially printing money right now. So you mentioned you're looking for the safer options in terms of gold companies. So what metrics are you looking at right now to help you pull out which ones are doing the best at this current time?
Yeah. So, margins is really important why is margins important? Because since I don't know if we're at the end of the bull market or it's going to keep going higher, I want to protect my downside. And if there's a company out there that's, say, producing gold at $3,500 an ounce, while gold is $4,500 an ounce, they're making $1,000 an ounce. But then if the gold price falls to $3,200, they're suddenly losing $300 an ounce. And that company, that stock is going to get destroyed just by the stock or just by the gold price going down $1,000. Now, if they have debt, maybe that company even goes bankrupt, or maybe they're in dire straits and they have to sell a royalty on their assets or sell off other assets just to stay afloat. So margins is very important. So I'm looking for the companies with the highest margins, and in general, you can do that in the royalty and streaming space. So the royalty and streamers, if the gold price goes down and they get a certain percentage of their revenue from gold, their stock price will suffer because they're selling their gold for a lower amount, or they're getting a lower payment for each ounce of gold produced. However, their margins don't compress. So if they have 90% margins today, they have approximately 90% margins, even if the gold price is $1,000 lower. Whereas the producer, they not only sell the gold for less, they would sell the gold for less than they are today, but also their margins collapse. So you get hit with that double whammy, which can really tank the stock price.
That makes a lot of sense, going over to the royalty and streamers. What companies would you be looking at in that space as your preferred companies? I know we've all heard of Franco-Nevada, Wheaton Precious Metals. Would you stay at the top there, or would you go further down the chain?
If you asked me this question a year and a half ago, a lot of the juniors were really cheap. And I would have said the juniors, because they're just trading at such a big discount that it's worth taking that bet. However, a little while ago, we saw pretty much all the juniors really run hard. And now, in general, they're no longer cheap. They're not cheap like they were 18 months ago. And my answer today would be the big guys. So I would be looking at Wheaton Precious Metals and Royal Gold, for example. Those are two very high quality companies, two of the three biggest in the space. And they have great margins. They have very low general administrative expenses relative to the revenue they bring in. So they get to reinvest almost all of their after-tax cash flow into growing their business. So Wheaton Precious Metals, for example, typically just the money they earn in interest covers their G&A. So they get to reinvest 100% of their after-tax cash flow into growing the business. Royal Gold, in the latest quarter, was something like 3% of their revenue was spent on G&A. So they get to reinvest almost all of their after-tax cash flow into growing the business. Whereas even still, a lot of the junior gold royalty companies are spending 25, 40, even 70% of their revenue just to cover, let's call it G&A and sometimes interest expense. So there's a lot of the juniors that have very little revenue left over to grow their business. So for that reason, if we're talking about assets they don't already own, I think we're going to see a lot more growth from the big guys than we are from many of the juniors going forward.
Very interesting. And as we're talking about growth, it is probably a good time to talk about some current events in the royalty and streaming space. We had, I believe, just this morning, we had Elemental Royalty announcing plans to acquire Vizsla royalties. So wonder if I can get your thoughts on that transaction. How are you looking at that deal?
Yeah, sure. Elemental is even though they're buying a company, they're essentially paying for one royalty on a very significant project. And even though they're paying a premium to the current share price, I do think they're getting a reasonably good value there. And the reason is because, earlier this year, I think it was in January, there was something really sad that happened at that project. And that is that 10 of Vizsla's employees were kidnapped, and 5 of them have been found, I believe, as of the latest update, and all had died. So it's presumed that all 10 are no longer with us. Now, and that caused the price of Vizsla silver to crash, and it also caused the price of Vizsla royalty to come down quite a bit because they have the royalty on that project. So even though Vizsla was funded to build the mine, or at least they have a lot of cash, they have several $100 million in cash. Well, that tragic event is going to probably delay it, I would guess, by a couple of years, delay the mine build by a couple of years. So, yeah, I mean, I think Elemental got a good price, and that's going to make a huge difference in their growth profile, assuming the project advances. And that's certainly a risk that Elemental is taking. There's a risk that things don't get better there, or there's a risk that things get worse. And maybe it takes longer than a couple of years for them to start building the mine. In which case, maybe it's not a great investment for Elemental, but overall, I like that purchase for Elemental, and it's going to boost their production a lot should that mine end up getting into production. So yeah, overall, those are kind of my thoughts on that.
Great to get your take on that deal. And while we're talking about Elemental, I want to ask you a little bit more about that company. I know that they have this connection to Tether, and I think it's really interesting, but I don't know if I fully understand it. So I wonder if we can talk about that as well, and also get your take on what that means for the company, if you like that connection there and what it could mean moving forward.
Yeah. So what do I think about Tether being involved with this? Well, it's certainly a big change, and I think this is actually what fueled the share price spike a little while back in all of the juniors, because you saw Tether investing a bunch into Elemental. And at that time I was thinking, I bet they're buying other juniors too. And that turned out to be true. So yeah, they've bought positions in other junior royalty companies. And I like the fact for Elemental that they have access to as much capital as they need from Tether. Tether has very deep pockets in the tens of billions of dollars. So if Elemental finds any deal around the world that they need lots of cash for, they can get that cash. So that's really good. But I don't know how I feel about having Tether representation on the board, instead of having the board filled with people from the industry with, technical expertise, with financing expertise, and just overall mining industry expertise. So I haven't made a decision on what I fully think about that yet.
I understand what you mean. I can also see both sides there. I think it's quite interesting to follow. So we'll have to see how it plays out. While we're on the topic of M&A in the mining industry, I also was hoping we could take a look at the Equinox and Orla deal, also very recently announced. Curious to get your thoughts on that one. It's just the latest in kind of a string of deals in the gold sector that we've seen during this bull market. Do you like this transaction? Are there any key points that you would pull out for investors?
Yeah, we've seen a lot of M&A for sure recently, even just in the past couple of months. And going into this transaction, I was an investor in Equinox, not an investor in Orla. So at this point in time, I'm still researching Orla to see what I think about it. But overall, I'm liking what I see about the company. And overall, in general, I think it's good when companies merge together, because they can lower their combined general and administrative expenses, which gives them more cash flow to reinvest back into the business, or to deploy to shareholders, or buy back shares. It's just, I look at G&A as kind of a tax on the shareholder. Yes, there's G&A that's necessary to run every company. But when you can combine two different teams and get a little bit more lean for the combined company, that does help. And this will allow the company to divest some of their lesser assets. So we saw this after the Calibre transaction. So Equinox divested some of their assets, like the Pan gold mine, and then they divested of their Brazil assets. And we'll probably see that again after this. Now, I would have liked Equinox to wait a bit longer to do another transaction. I mean, this is a Ross Beatty backed company. And Ross Beatty is known for doing lots of M&A and then bringing in higher quality assets, getting rid of the lower quality assets, focusing on those higher quality assets, and then doing it all over again. So if you're investing in a Ross Beatty company, that's something you should probably expect. But, Equinox is in the process of ramping up 2 new big gold mines in Canada. So I would have rather seen them focus on that for a while longer and get those running just how they should be before having to focus on a bunch of new assets in the portfolio. So I like that there's going to be a lower combined G&A. I like that they're going to be able to be a North America's focused gold producer, which should get them a higher multiple. And then I'm guessing they'll divest of those assets that are not in North America, because that will always kind of be a drag on the stock valuation. So I like that. But I don't like that maybe Equinox could lose focus on what was most important for them right now. And that was ramping up Greenstone and Valentine. And, I also don't like that Ross Beatty is no longer going to be involved. I mean, he's going to be an advisor to the board, but he's no longer going to be the chairman. And that's a big reason. His involvement and him owning shares is a big reason why I was an investor in Equinox Gold. So those are kind of my overall thoughts there.
Great perspective. And I think you went in exactly the direction I was hoping, because my impression as well with Equinox has been that they want to scale up, get big during this gold cycle. And I wonder, do you think now they would take a pause on mergers and acquisitions for some time and get used to the ones that they have, or should we be prepared for even more in the future?
I thought they were going to take a longer pause on mergers and acquisitions than they did, because they had quite a few projects that they needed to get taken care of. So, for example, I already talked about the Equinox or the Greenstone and Valentine ramp up. So they have those mines that are already built that they're trying to ramp up to full capacity and work out all the kinks that are going on there at those mines. But then they have Valentine phase 2 that they're just about to start. So they're doubling the processing capacity of that plant at their new Valentine mine. So they have that project. And then they have the Castle Mountain phase 2 project. So this is a past producing mine. They ended up shutting it down because it was a very small mine with high costs. And they shut it down temporarily while they waited for their permits for phase 2. And they're supposed to get a record of decision by the end of the year. So then they have that mine to build, assuming a positive record of decision. And then, assume they also have this Los Filos mine in Mexico that's on care and maintenance. And they're trying to work out an agreement with the local communities there, to be able to build a CIL plant and build a mine that's going to be producing a lot of ounces, something like 290,000 ounces for quite a few years at very reasonable costs. So they have that potential mine to build in the pipeline as well. So they already had a lot of things that they needed to focus on. So I didn't think they needed any more. but now they have several from Orla's portfolio as well.
Very, very fair. Thank you for going into that one. So you were mentioning when it comes to M&A, when companies come together, they can lower their costs. And this is another direction that I wanted to go in with you, because we have the Iran war going on right now. This is creating a lot of oil price volatility, and it's raising concerns about inflation. And I think those are intensifying the longer that this isn't resolved. So when you are looking at mining companies right now, how concerned are you about inflation at the moment? And is it impacting your strategy right now?
Yeah, we're certainly seeing costs go up, basically across the board. And I mean, this starts, I think this starts with the government's being in debt and not being able to fund their expenditures. And then they end up having to create money out of thin air, which causes the prices of everything to go up. It causes cost of living for everybody in the country to increase. And I mean, then companies have to pay their employees more. The cost of all the inputs go up. So yeah, I think that's something that companies are going to continue to have to deal with, and rising costs will probably continue to be a struggle. And we're seeing costs go up. A lot of the increase in all-in sustaining costs from various gold producers, for example, is simply because of gold price going higher. So when the gold price goes higher, everybody who owns a royalty on that project gets paid more. So, for example, if there's a 10% royalty on a project and the gold price goes up $1,000, that the royalty payment goes up $100. So that will automatically, immediately increase the all-in sustaining cost of that gold producer by $100. And we've seen the gold price go from $2,000 to $5,000 pretty quickly. So that's a $300 increase in all-in sustaining cost just from having a royalty on the project, assuming it's a 10% royalty, which when you add up all the royalties on many projects, including government royalties and all the private royalties, a lot of times it is like that. And sometimes it's even higher.
Well, and a related question. So we're having this focus on oil right now, as well as energy more broadly, I think is coming into focus as we worry about supply chains. You mentioned some of the areas you're interested in right now. Are oil and anything else in energy included in that, or how are you looking at those sectors right now?
Yes, I am, but I'm more in the education phase of my career for oil and gas. So I'm trying to learn as much as I can about it. And I'm not deploying a lot of my personal capital into oil and gas, although in general, I would like to. Now, the Iran war complicates things a bit because I fear the oil price coming down when there's eventually a resolution there. And that when there's a resolution, the oil price will likely come down very quickly. So if investing into oil stocks today, I think that's something you have to keep in mind. Now, like with many of my answers, there's two sides to this, because around the world, there's dwindling supplies of oil with the Strait of Hormuz closed. And once those stockpiles are down to nothing, well, then suddenly they have to become buyers on the international market. And people are very price insensitive to oil and hydrocarbons because, well, you need energy to live. That's how modern day societies survive. So they need the energy, so they will bid up the prices. So if we see stockpiles around the world continuing to decrease down to zero, and in some countries they have 30-day stockpiles, in other countries they might have a year, and it could be anywhere in between there. But if we see those stockpiles dwindle down to nothing, you could see the oil price really, really explode higher. And yeah, I mean, the stock prices of the oil companies who can actually sell their oil and can actually get it to market are going to be making a lot of money in those higher oil price environments. And if that happens, of course, and consequently, the prices of their stocks are going to go way up. So there's two sides to it. Do you protect your downside, or do you take that speculation and put in money hoping that the oil price skyrockets? Now, I'm more in the camp of protect my downside, because, and that's just in general, my investment philosophy, because if you suffer a 75% loss, you need a 300% gain just to get back to where you started, not to get ahead, just to get back to where you started. And if you suffer a 90% loss, you need a 900% gain to get back to where you started. And 300% gains and 900% gains are very, very difficult to achieve. But if you can protect your downside first, your winners take care of themselves, and you can get very, very wealthy just by getting a handful of triples in your lifetime, because those triples compound if you can get triple and then not lose money and then invest that capital into another triple and so on.
That makes sense to me. And I want to go back to your education process here. So you're in the learning phase, it sounds like, in terms of oil. What is your process there? I think that would be useful for other investors to hear about. When you are trying to learn about a sector before getting involved, what are you looking at? How are you doing that?
I'm listening to lots of the earnings calls, and trying to understand all the industry lingo to start, and reading lots of quarterly reports and annual reports. And in that, you start to learn the industry lingo and accounting and all of that. And then reading industry publications like the Oil and Gas Investor. And then over that, just with reading lots of reports and listening to lots of experts and listening to those earnings calls and listening to what questions the analysts are asking and things like that, and reading those industry publications. Well, then slowly over time, you build up a base of knowledge there and can become a better investor.
So really immersing yourself in that space. I think that also makes a lot of sense. And as we are getting toward the end here, I want to go back to some of the other commodities that you mentioned toward the beginning that you're trying to transition toward as we move away from gold and silver. So copper, I think you mentioned it's not really the right time to be buying at the moment. How are you thinking about it? I think you also mentioned nickel, maybe some on the agricultural side. Is there anything that you're imminently looking to buy that you would mention?
Nickel would be imminent, but it's a really hard to find a good nickel play. So, that's something I'm very interested in, but still researching in the research process, finding that right opportunity.
Okay, nickel. Well, we'll come back to you next time to see how it is progressing on the nickel side. And I will let you go. Before I do, if you would be able to let us know where we can find you online, any information you'd like investors to know.
Sure. Well, I have the Mining Stock Monkey YouTube channel where I do some free deep dives into companies. But really, my main focus is my research service. And basically, this is what I'm doing with my own money. You're going to learn what I'm investing in with my own money and why, and what I'm avoiding, and things like that. And I was actually recently looking at my subscription data, and I was kind of surprised to learn that 90% of people who sign up for an annual subscription end up resubscribing for a second year. And this is an industry where there's about a 50% annual resubscribe rate. So that tells me that I want to incentivize you to sign up for an annual subscription. So the first 7 people who do will get 25% off your first year. And as another incentive to choose annual, well, everybody gets a 30-day money-back guarantee on my service. If you choose an annual subscription, you're going to have 90 days to try it out instead of 30 days. No questions asked, money back guarantee.
Well, that is a very, very high resubscription rate. So congratulations on that. We'll have all of your links in the video description for people to check out if they would like to. And thank you so much for coming on today to go over your process and some recent news. I think this is really valuable.
Yeah, thanks for having me on, Charlotte. I hope to do it again soon.
Yes, we'll have you back again in the future. Once again, for now, I'm Charlotte McLeod with investingnews.com, and this is Jordan with Mining Stock Monkey.
Thank you for watching. If you like this video, make sure you hit the like button and subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below.